The peak body representing mining companies says China's role as a key investment partner in Australia isn't just about the country's hunger for resources. AMEC, the Association of Mining and Exploration Companies, says China takes a far longer-term view on its investments, a welcome relief from the growing number of issues which are making it harder to raise capital in Australia. Andrew Robertson reports.
They might be rolling in cash thanks to the global commodities boom, but miners are not happy. They think the federal government's taxation policies are damaging their prospects, and opposition leader Tony Abbott was at their national conference to encourage them in that thinking.
The mining tax is a bad tax. Let's not make any bones about it. The mining tax is a bad tax.
As is the carbon tax, according to Mr Abbott, but tax isn't the only gripe the mining industry has with the government.
Regulatory uncertainty, whether it be about the carbon tax, the resources tax, changes in royalties, or the fallout of state versus Commonwealth disputes, changes of government, outlawing industries in effect. These are all making our industry more challenging and complicated than ever.
Mr Bennison also took aim at the 3-month time frame underpinning the decisions of fund managers who effectively control the stock market. He says that's incompatible with the long-term planning horizon, which is a fact of life in the mining industry.
It's not so much whether the fund has made money for its members, it's whether it's been outperformed by its peers. A 2% return when the average is 2% is better than 4% when the average is 6%. The implication of this for companies is that it's increasingly difficult to attract long-term risk capital.
Which is why, according to Mr Bennison, the mining industry's eyes are increasingly turning to China.
China's willingness to look beyond the more immediate return on capital benchmark that govern Western investment decisions is delivering the country, that is China, substantial stakes in world-class resources and projects, and in the process making Chinese entities highly desirable joint venture partners, financiers and customers.
As pressure was being applied to the government at the AMEC conference, elsewhere in Perth, Rio Tinto boss Tom Albanese was also weighing into the debate on the carbon tax.
My recommendation that would be a policy should be cautious. It should start low, and it should safeguard the export sector.
Mr Albanese believes the proposed carbon tax is misguided because it will have virtually no impact on emissions of carbon.
You've got to recognise it's a global issue, and while it's courageous and noble to be in the front, ultimately it needs to be the big emitters in the world that need to make a difference. And those big emitters are going to be the US, they're going to be China, and then they're going to be India.
Mr Albanese claims by acting alone on a carbon tax, the Gillard government is experimenting with the economy, which he says carries big risks.